Welcome to Mad Money. Welcome to Cramer America. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain, but to educate, to teach. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. What can I say? We temporarily forgot who was in charge, who determines stock prices, who decides whether we're going to have an up day or a down day. No, I'm not talking about the invisible hand of the market. I'm talking about the president. That's right, because President Trump isn't happy with his trade negotiations with the EU. He unilaterally decided this very morning to slap Europe with a 50% tariff on June 1st, unless they come to the table, make a deal. On top of that, he singled out Apple for a 25% tariff on cell phones made in India because he wants those products, well, he wants them made right here. Honestly, it's cheaper for Apple to just pay the 25%. That unfriendly government intervention is why the Dow declined 256 points, the S&P lost 0.67%, and the Nasdaq dropped 1%. Hey, Simmons, what about this guy? Trump sure makes his business interesting. Of course, these actions make it much harder to own stocks for you and me. I own my travel trust, you own them individually. After the averages bottomed on April 7th, we very quickly got used to the idea that the president was done roiling the markets. We thought he learned his lesson from that brutal 19% decline from the highs in February to the post-Liberation Day lows in April. We were wrong. It's tough to tell what awaits us when the market opens next Tuesday if the president's back on the tariff war path. I was heartened to see that the market could recover some of its losses ahead of a three-day weekend. Hard enough that we actually did a small buy of a bank stock for the Travel Trust today. We would have bought more, but I am concerned that this market now has a downward bias to it. The early morning futures have been down for days on end, and you know I don't like to sleep, and I see them, and they just make me sick. 3:34, 4 a.m., the market's already drenched in red ink. Now, we do know this. Next week is a huge one for earnings. With Costco, Dell, Salesforce, Nvidia, any one of those can impact the entire sector, if not the market itself. Let's not get ahead of ourselves. We have some high-profile companies reporting on Tuesday. Now, we start with one of the top performers of the year, and that's a company called AutoZone, AZO. This auto parts chain has been on fire, and it doesn't hurt that AutoZone is one of the most aggressive buybacks I have ever seen. They've more than cut half of the stock out in the last decade. If the stock gets hit, please do this. You should just go buy it, because management will be right there alongside you buying it after a few days. What a horse. After close Tuesday, we hear from a company that's suddenly adored. It's Okta. They've been on. Tommy Kidd's been on a bunch of times. Cybersecurity specialist that handles login and verification credentials. Analysts have been climbing up all over themselves to recommend the stock ahead of the quarter. I think they're right. I think the numbers will be tremendous. Wednesday morning, well, let's see. We got two retailers, Dick's Sporting Goods, with a stock that's been crushed since it announced its plan to buy Foot Locker last week, and Macy's, the now chronically underperforming department store chain. It is imperative that Dick's explains its rationale for the Foot Locker deal. Maybe the stock can get some footing. But right now, people think this deal is a game changer in a real bad way for Dick's. I don't know what they can say to change that, but I tell you, the stock has just been eviscerated. Wednesday night is huge. We have not one, but two big quarters from Nvidia and Salesforce. Nvidia is regularly on the hot seat these days, so often we forget it's been morphing from a hardware company into a hardware company with a huge software component. Yes, that's what CEO Jensen Huang spoke about in the big speech in Computex in Taiwan earlier this week. I bet we'll see and hear more about the software side of Nvidia going forward, including this call, because that helps explain why the stock could still have a lot more upside. We own it for the Travel Trust, and for now, we're just sitting on it. Look, the stock's in no man's land. Salesforce is a very tough call here. Some analysts are saying Agentforce with Agentic's platform is producing a revenue breakout for the company. Others say that Agentforce is a distraction, making it harder for CEO Mark Benioff to make the numbers this quarter. I'm not sure. So once again, the Travel Trust is doing nothing ahead of the quarter. Oh, and tonight we got a real complication with buzz that Salesforce is once again in talks to acquire Informatica, the data management company. Now, this is a deal that Wall Street clearly doesn't want, as Salesforce's stock tanked when it was first reported in April of last year, only recovering when they walked away from the deal. And that's why the stock fell nearly 4% today on the news that it might be back at the table. Now, I am sure Mark Benioff is paying attention, because the market could react to the same way that the market reacted to Dick's Foot Locker. Bad. Next, on Thursday after the close, we hear from the company that I think has the most consistent earnings and also the most persistent sell-off after we see the earnings, even when they're good. And I'm talking about Costco. It's unnerving to watch a fantastic quarter and still see a stock go down. And that's just how it's done with this one. Even as we have a fairly good idea how the company's doing, because you know what? This company gives us monthly numbers. As we tell Investing Club members, don't buy Costco ahead of the quarter. It's going to go down. It's like TJX. You'll usually get a much better price if you just wait a couple of days. TJX might be the most undervalued stock in our entire portfolio. Why? Because it had the huge sell-off. We've now waited a couple of days. It's probably going to rally. Hey, speaking of retail, ever since Richard Dixon became CEO of the Gap almost 2 years ago, he's been busy reinventing the place. We've had him on a number of times. It is working, people. And since the last quarter, analysts have been falling all over themselves about this story. And now here's one that if it comes down ahead of the quarter, you have my permission, my blessing to pull the trigger and do some buying. Fall into the gap. Remember that? Also on Thursday night, where there's a lot of chatter about what Marvell Technologies, MRVL, will report. Same with Dell. Both are integral parts of the data center, and there's been a lot of speculation about how Marvell might miss the quarter, while Dell will blow away the numbers. I'm not so sure that Marvell will disappoint. Matt Murray's a pretty good CEO, but I do expect Dell to be darn good. I bet they pull back a ton of stock, just like Michael Dell said he would if the stock went down. Oh, and then there's a charm stock, Zscaler, cloud-based cybersecurity company that's gotten into the habit of reporting upside surprises. It's unnerving to me that it doesn't seem to matter what this company reports. It seems to be so loved these days. That's where the opportunity is. Lots of chatter, by the way. Ulta. That Ulta Beauty is going to have a very strong quarter. Ulta is a stock that people like to make bets on. I don't like that. I think retail's very hard to navigate here. If you want to own Ulta, please don't trade it. Just own it. Going back and forth will only lose you money. As long as you believe in the business, just hold on for the ride. Finally, on Friday, we get a read on the inflation from the personal consumption expenditure numbers. Before Jay Powell took over as Fed chairman, we never used to focus on this indicator. But it's Powell's favorite way to measure inflation, so it's become incredibly important. We need inflation to cool off. And that's mighty hard when plenty of goods are going up in price thanks to the tariffs. If you mandate tariffs, you're mandating higher prices. I mean, because a tariff is just a sales tax on imports. It's never really meant anything else. We can't spin it beyond that. Bottom line, we're heading into a fickle week, one that will no doubt be punctuated with presidential postings about our trading partners, their intransigence, their negligence, their perfidiousness. Of course, the market only shrugged off the real negative posting from this morning and instead focused on the endless obsession, the 10-year Treasury, which was steady enough to trump President Trump and his renewed call for high tariffs. I hope that can continue next week, but I'll tell you something, I wouldn't count on it. Can we please start with Bill in Massachusetts, please? Bill?
Jimbo, it's your friend from Boston. I just wanted to thank you and your staff for giving us incredible encouragement and knowledge to get through this tough time with all the tariffs.
Bill, you always thank our team, and I love that, and you are a faithful friend of the show. Let's go to work together. What's going on?
Jim, I want to know what you think about Boeing, and when the government, do you think, will let up on it and let it fly?
I think Boeing goes higher, okay? I think that Kelly Ortberg's got a handle on things. Bill, it's an up stock. And when I say that, what it means is that if it comes down, buyers immediately come in, they pounce, and they buy. And I'm with them. I want to go to Clive in New York. Clive.
Yes, Jim?
Yes, partner. What's up?
Not too bad. I'm Broadcom. I like Broadcom. I have a lot of Broadcom.
Broadcom is good, my friend. It's one of my biggest positions for my charitable trust. This stock has been a horse, and I got to tell you, as far as I'm concerned, even up here, because it's in the data center and it's taking names and taking share. Now, it's tough to tell what awaits us next week, so you'll have to keep a level head. I know that's hard for me, but you can give it a try, and stay steady in the face of unpredictability. Oh, man, by tonight, I'm giving you my latest on the intersection of Wall Street and Washington and how Trump is positioned to impact tech giants like Apple, like Nvidia. Then, is Ralph Lauren fit for long-term growth in this tape? I'm going to break down the stock after yesterday's report. Plus, I'm giving you a behind-the-scenes look at what I do every day in the Investing Club. Don't miss my take on some of our club members' questions, and stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.